Hey everyone, this is Kirk here again at Option Alpha. It is Monday, March 7th, about 8 o'clock after the markets have closed here. I wanted to go over a bunch of ETFs on this video, so this is gonna be a little bit of rapid fire, but please take notes on this. There's a lot of ETFs I've kind of highlighted and want to go through. Although I don't usually do this on the video, I thought it'd be really good to kind of go over a lot of these different sectors. Some of them kind of relate to one another, so you'll see similar charts, not obviously the same, but I think that there's a lot of good patterns shaping up. A lot of these patterns are going to take a little while to progress and to unfold. But there's a lot of good trades out there. I think a lot of good risk reward opportunities that are right in front of us right now. So I'm just going to go down my list here. You can see I have a list on the left side of ETFs. So I kind of follows the main ETFs covering most of the sectors. And so I'm just going to go down that list. There's a couple ones I've highlighted here. And then I'll just start right now with DBA. This is the ProShares Agriculture Fund. So this is kind of a compilation of a lot of things agricultural, not really heavily weighted in one area or another. I just think it's really overbought at this point. I think it's hitting the upper part of this channel, even though a lot of this stuff in the Middle East is still happening. And obviously this is going to be something that we have to keep in the back of our minds, is that if things really start to escalate in some of the other countries, then we could just throw a lot of this out the window, because a lot of things are dependent upon oil. So if oil prices go up, everything else is going to go up, etc. So, but right now, as it stands, it looks like DBA is kind of hitting this trend line that it's been underneath for quite a while. This is a pretty long-term trend line, some major hits on it, and it seems like it's got a little bit of room to come back down. I don't think that it's going to fall and really break down. I think 32 is a pretty good area right around here. You can see that the last time that it made a high and really used as resistance and then bounced off of as support was right below 32. So I think that that's a pretty good area for DBA. Moving down more, EEM. This is the emerging markets ETF. This is one that I think could be a very, very good candidate for a strong breakdown here very soon. It's been riding for the most part the last 2 years on this very strong channel, but just recently has broken that trend line here back in early January. Now, of course, it's been trading sideways since then, and it could always come back up and hit the underside of this trend line, but we're starting to now see the signs that this could be starting to fail. So this is one that's still early in its development, but definitely a break below this trend line here, right around 45, would really be tough for this index or this ETF to kind of recover from. And you can see that below 45, there's really no support until you really hit 35. So it could be a very, very quick and violent ride lower. As I'm going lower, HYD. This is one I think is a great short candidate. This is the high yield municipal index. I think it's already had a beating before in November. We've talked about that beating. Said it would continue lower. It's been continuing lower. It's had a really good run up here in January and February, but you can see that it's already again started to break these very quick trend lines. I think that a move back down right around 2650 probably a pretty safe bet at this point. So this is one of those things where you could make a very good trade, maybe buy some out of the money puts and hopefully make a couple dollars on those, or maybe a credit spread or two right around the strike price or the market price right here. But I think that this is a really good trade. I think that there's probably some strong support down here at right above 2650. So that area looks like it could be good for this thing to start coming back higher, if it ever does come back higher, right? You can see the last couple times it started to break down, it's really broken down hard and really headed below all of these lows. So every low has been lower. Every high seems to be a little bit lower as well. Okay, moving down the chart, I think I just have a couple more here. SLV, this is the silver ETF that we had just posted about yesterday, actually. And of course, wouldn't you know it, I told everyone to kind of wait for a bounce in silver and wait for a pullback. And of course, silver heads up another 1.5% on the day. So no big deal. We still have our long out of the money calls on silver that we've had for months and months and months now. We'll probably exit those. I have a trailing stop on those right now. So as long as silver keeps going higher, it can obviously continue higher as much as it wants. As soon as it pulls back a little bit, we'll be out of that long call. But I think that silver pulling back to right around the 30 range is probably a good trade. I think at that point, it's a little bit more safe risk reward. You can see that right now, and even if when I zoom out on this chart, that it just looks like a moonshot at this point. So very violent move. We know that these moves don't continue on forever. And while I do think silver is going to be a really good trade long term, I just don't like the price that it's at right now. I think that 30 is a much more better risk reward entry than waiting and trying to go for right now at 35. And then I believe the next one here is TMV. This is an interesting one. This is one I'll tell people to play with a little bit of caution. It is the 30-year Treasury Bear 3 times ETF. So this is a 3 times ETF. It's not a double ETF. So you got to be careful with this one. If Treasuries really start to rebound here soon, this could really tank. But I think this has been a really nice looking bottom that's forming. You can see that the volume has been increasing substantially since really October when it bottomed out. You can see the volume has almost doubled on a daily basis or tripled in some instances. So I think this is a probably a good opportunity where you want to play some out of the money calls on this. You don't really want to buy this ETF directly because you have that contango factor to worry about with this. But if you buy some out of the money calls, they're pretty cheap. And if you do get a big move in the treasuries, we get a big sell off in the treasuries, then these will make some money. TBT is also another good one that you could look at. We've posted about that a couple of times on the blog as well. Okay, I think the last one that we're going to look at here tonight is XLE. This is a really good one, one that I like to look at. And actually, I think it's at a really good point now. Again, like a lot of the other things, it's been underneath of this major trend line for a long time, but it's now come back up and had a very solid retracement to that line. And I even go back, I think, on a 10-year chart, and this goes back quite a while on this chart. So yeah, you can see that this trend line goes back all the way to 2005. So pretty strong little trend line it's at. I think that the most likely scenario for the XLE, I think generally that the energy sector is obviously a little bit bloated because of everything that's happening in the Middle East. So sans any major blowups in Saudi Arabia, I think that the energy sector could be in for a little bit of a pullback. I think that the Fibonacci line right here at 6750 seems like the most likely area. It seems like it's hit that area of support resistance a couple times before in the past in 2008. So I think that's a really good area to start. Obviously, the very strong level would be right above this 60 level here, and this is the 50% retracement level. I think if we do get down there, then we could see a really strong bounce. So I don't think it's going to get below there. So if you're going to buy some out of the money puts, I wouldn't buy anything lower than 60. I think that that would be just giving money away at this point. Okay, I hope that you guys enjoyed this. I know it was a lot of charts, but as always, if you guys have any questions or comments, please email me, and happy trading.